Welcome to This Month in Real Estate Investing, where we separate the news from the noise. I'm your host, James Brown, and I show people how they can make safe, secure returns through our pre-vetted passive investments. If you're tuning in and at all interested in investing, I encourage you to take a minute to join our private investor club so you can get exclusive opportunity alerts when we come up with deals. And we can't advertise these to the public, so you'd have to sign up for our club. So just go to legacywealthcollective.com. In this episode of This Month in Real Estate Investing, we will be breaking down a variety of real estate investing news items, including housing apocalypse, 80% major U.S. counties financially devastated, Biden 5% rent control threatens to kill real estate investing growth, and families must move as nearly 200 more condos deemed unsafe. And don't forget, if you're watching live on YouTube or Facebook, you can share your thoughts and questions during the show, and we'll see them and we can answer them. All this and more on this episode of This Month in Real Estate Investing. Let's start the show. All right. Our guests today are James Michener and Nathan Caldwell, possibly Walter Johnson if he shows up. In that order, James and then Nathan, why don't you share an intro about yourselves, your background, and what kind of investing you guys focus on?
Yeah. So, and that'd be me going first, right?
Yeah. Yep.
Okay, cool. My background is I started in real estate a little over a decade ago and started as a real estate agent. My guardian father was a broker real estate agent, and he had invested in quite a few properties and then retired by the age of 56. So I had a really good blueprint of everything that we were looking to do. And so at one point in time, I was selling over 150 homes a year myself, and then with that built up to 363 one year with my real estate team. So I was making really good money, right? And I'm like, well, I don't think I can keep going at this pace, and I want to follow that same game plan. So me and my wife house hacked. We bought a duplex, moved into it, rented one side out, bought another house, lived in that for about a year and a half, and moved into another one, did the same thing until we finally got to our house. And then we had enough capital built up that we just started buying these properties as rentals. Once that got figured out, the rental game was pretty good. Then I started loaning private money to investors looking to buy rental properties or looking to do fix and flips. And then we got into wholesale, which I wish I would have learned how to do wholesale earlier, because there's a lot of good deals out there, and it's a pretty fun way to stay active in the community in real estate, but not have to deal with some of the stuff I don't like as a retail real estate agent. So fast forwarding, I do about 15 to 20 loans a year. At any point in time, we'll have $2 million loaned out. We started a brokerage, so we have other people that are investing their money with us to lend that out as well. And then we're up to 34 units and have a really good passive income coming in at that. So all in all, there's 4 active businesses going, including which I'm dabbling into is some coaching. But right now it's kind of main focus is building up the real estate team, making it strong again because the market's been tough, and then starting to add stuff to the portfolio, which I bought a new rental 2 weeks ago, which I was absolutely stoked about, and I'll tell you guys that story. I live in Prescott, Arizona. Have a cute little family that I absolutely love, and that's kind of the why right at this point. And I love playing basketball and some softball and doing a little weight training. So yeah.
Cool. Right on. Welcome.
Thank you.
Nathan.
Yeah, I'll start with my why. I started out back in 2011. I was in camping, kind of like boys camp, running boys camp, like Boy Scouts, stuff like that. And I started an organization. It's called Camp Duffel. We provide camp experiences for kids in Latin America. Just got back from training our summer staff, around 35 counselors in Mexico. We're in Mexico, Colombia, Cuba, Haiti. And so that was my why. I've been doing that for 12, 14 years, something like that now, since 2011. And I was trying to fundraise, and I was poor as dirt and trying to figure out, how do I make this thing work, and how do I get to do this thing I'm super passionate about. So what I was trying to fundraise and talk to different people, and one of my good friends was like, well, I'm not going to give you any money, but I will give you this book. And he gave me this book called Rich Dad, Poor Dad. You guys have probably all heard it and all read it. But it was an eye-opening experience for me. I read the book. This was back in 2017. And it was like, my takeaway was like, I guess I just need to buy a house. So I bought a primary house, primary residence, rented it out. I'm a single guy, so I rented it out, the other 2 rooms, to 2 individuals. And they were very gracious, because we didn't have a kitchen, because I was fixing up the kitchen the whole time, and got to a year and I was like, wait, I can do this again. And so I did it again and again and again, and just have kept repeating that. I'm now up to, I'm under contract to get up to 19 units as a duplex that we're under contract on right now. Hopefully we'll close on that mid next month. And got my license, my real estate license along the way, and quit my W-2 and switched over to full-time real estate. I'm a lender and a real estate agent. Done a couple fix and flips, and trying to get into development a little bit. And yeah, so that's the short of it. I still do the Camp Duffel. That's still my passion and my drive, and use real estate to fund that. So
that's awesome.
Fantastic. Oh, I'm stoked to have you guys here. Let's jump into the news. So, from United States Real Estate Investor, housing apocalypse. 80% of major U.S. counties now financially devastated. So what they're saying, as we all know, home prices and mortgage rates are outpacing wage growth. They push those housing costs up. So they're unsustainable. And so they're talking about how homeowners are spending up to 43% of their income on housing, which, with lending, there's limits to how much you can spend on your housing. So
43 is about the limit.
You're right. Yeah.
Actually, as a lender. Yeah. 43. Anything about that, you're like, your fingers crossed. You're just hoping that they'll qualify from the underwriter. But yeah, so 43, it's pretty close to the limit.
Yeah. What's crazy is people want interest rates to go down, right? But if they go down the way people want them to, it's going to cause even more issue within the housing market. We just haven't seen the checks, and we haven't seen the balancing act happening like it should at this point in time. So that kind of worries me.
Do you mean balancing between price point and interest rate? Is that what you're talking about? So we have
balance between affordability and housing, right? So usually you would see maybe a little bit of a decrease, but at this point in time, I have a lot of friends that are trying to buy houses and they can't afford it, right? At this point. And they thought prices were going to go down. What I've been telling them is if you're on the cusp, just buy right now, because if interest rates do go down, that house is going to be worth $50,000 more by the time that happens, because everybody's waiting on the sidelines right now to go purchase. And once those drop and it becomes more affordable, it's going to be crazy. That's my opinion.
Oh, yeah.
For every point that interest rate drops, you've got another, I think the stat is another 5 million people become home qualified. Now, maybe not all 5 million of those people will want to purchase, but that's, that introduces a whole nother level of people into the market that are now able to buy that weren't otherwise able to buy. And so, if we're like, oh, well, what do you want it to drop? Oh, well, 2 points. Okay. That's 10 million people.
that you're going to be competing with.
that you're going to be competing against. Yeah.
Yeah, that's wild. That's a really good stat, by the way. Thank you for saying that.
Yeah, of course.
Yeah.
That's good. So, yeah, affordability.
I also think I don't know. I've done a little bit of research on the idea of like negativity versus positivity, especially in like media. And media, people. The claim is that like, oh well, media is supposed to be non-partial, but media is partial to something. Media is partial to getting clicks, right, and getting views. And we know, like, innately, we are more likely to engage with negative news. Sadly, I mean, like, I wish we weren't created that way as humans, but we are. And so we engage with negative news more likely than something positive. Like an article that was like, hey, home prices are hard, but if you really try, you could probably buy a house. It's just not going to like create like clickbait, right? So like housing apocalypse, on the other hand, there's clickbait for you. And we're also more likely to trust and believe things that are negative. So because if somebody says, oh no, it's a great time to buy, we're like, what are they trying to sell me? And if somebody says, it's about to go sideways fast, then it's like, okay, I'm more likely to believe that person than the person who's telling me, positive things. Whereas it's like, what should be is like, well, what's the truth? Not like what's more likely or what's more believable based on just feelings, right? But we all run by feelings oftentimes. So
that's a great point, because they did a news article. Costco hikes its membership, right? So I clicked on it. I usually don't do that, right? But I was like, they hiked it. Like, what's that mean?
Like,
I think it went up like $5 or $10, and I was like, that's such clickbait right there. Like, you put hiked in there. Like, no. So no, you are right though. Great point.
Yeah. That's what this show is for, because people see these headlines, and some are more sensationalized than others, but that's what we're doing, is breaking down.
So media has what I would say is like, media has an agenda. Don't think that they don't have an agenda in their writing either. Like, yeah, okay, the agent has an agenda. They want to sell you a house. The lender has an agenda. They want to give you a loan. Social media has an agenda. They want you to click on it. So like, we have to read through all of those agendas and find out for ourselves, like, well, what's the truth here? And which is hard, because like, we're getting bombarded by a million of these articles every single day. So
yeah. I mean, and it's not just like the real estate cost, right? When people are saying 80% of counties are in trouble, it's their fuel costs, their food costs, like everything's gone up. My handyman contacted me 2 months ago, and he's like, hey, I need to make $10 more an hour. I'm like, oh, dang. And that kind of puts him where everybody else is, maybe a little bit cheaper, but I had to do it because I like him, I trust him, and I need a handyman for our properties. So that's what I've been putting when I do my rent increases. It's like, now I'm trying to do it every year, and I'll touch base on this good point. But it's because I need money to be able to reinvest into the properties. Because if I keep my rents low, like 30% below market, which I've usually done, I don't have the available funds to be able to go fix their sink or fix their flooring or fix their roof. So I'm looking at more at that, and that's the explanation I've been giving the tenants, because my insurance has gone up and my taxes as well. So you're getting pinched from everywhere.
Yeah. We just had that with one of our rentals. Just, holy smokes, it went up. We had to have that conversation with the renter. And we could have actually bumped up the rent more. This is a rent to own deal, which is kind of one of my focuses, but it was still we had to bump it up. Couldn't keep it. So it called out a few counties in that article. One of them was Maricopa County, Arizona. They're in Phoenix, right?
Phoenix, yep.
That's one of the ones, the highest concentration of affected people. Then Cook County, Illinois, and then San Diego and Orange County in California.
Oh yeah, that's an easy one to call out for that. I was just there. It's extremely expensive. Everything is.
Yeah.
But I guess I don't have much other to say unless there's questions or whatnot. How do you think they're going to fix this? Fix the issue of that Do you guys have any insight, or what would be your guess? I guess.
I don't know. I think we achieve a new balance, but we've got. I mean, if you talk to our grandparents, right, and they're like, "Well, I worked for $1 a day," and it's the dollar is just becoming less valuable. And I think that if you look at throughout history, throughout the rise and fall of nations, you see inevitably the government of whatever nation has a desire to print more of its money because that gives them back control and power and like spending ability. And so they print more of it, but in printing more of it, then they loosen the value of the thing that they're printing because you don't actually create new money. You just take all of the money that you have and you've redivided it over 110% instead of the original 100%. And so now everything is worth 90% of what it was. And so you're not actually creating it. The government in printing money is actually just redistributing the amount, the same value of the country back to itself.
Yeah.
And so it's in their advantage to print money or make money, right? Like whether it's minting gold coins or whatever. But like, and so I mean, I think that we will see this for as long as humanity exists. We'll see a depreciation of whatever currency in whatever government, functioning is happening. And so it's a part of life, which is one reason why I like real estate so much is because it does remove you, because land isn't a currency that governments print. And so you can then obtain land that there's an intrinsic value to it set aside from anything that a government decides, hey, this is what this is worth. And so in owning land, that it's just, that has set you apart from, being part of the rat race, in my opinion.
Yeah.
Yeah.
The other part to this is, and I've been thinking about this a lot because a lot of people are complaining about how expensive everything is, even myself, right?
Yeah. Yeah.
And if everybody just realized, like, if something's too expensive, they would just stop buying it. Those prices will go down because it's got to meet. There's not as much demand, right? So if we all came together, which is totally unrealistic, but I mean, even 20 or 30% of the people in the United States or the world were just like, I'm not spending $1,000 on an iPhone. There's no way. And so they go to cheaper alternatives, whether it's they go to Android or they just keep their phones longer. Those prices will drop inherently because they want to sell those products, right? And if they're saying, just like a house, when you list it, like if it's not selling for that price, you need to drop the price in order to get more activity and get more people interested in buying it.
Totally.
Yep. Yeah. Supply and demand.
Yep.
Exactly. That's how it works. Yeah. Yep. Well, let's jump to the next. Oh, go ahead.
Oh, I was just saying, I was hoping we would have seen. I mean, I'm not hoping for doomsday, right? But I was hoping that there would be more of a change in the pricing because people were just like tired of it. And when the interest rates double, the affordability just doesn't make sense. So if everybody kind of held strong for another 6 months or something like that, they would see those prices adjust, and sellers and wholesalers wouldn't have a choice but to drop the price to make it make sense for other people to buy it.
Yeah.
But I don't know if you can, because we just don't have, well, at least in Denver, it feels like we have a shortage of housing. So even if you drop, there's so few houses even being listed.
Yeah.
It's like where people have to live somewhere, right? Like, and so it's not like an iPhone where we can just make a lot more of them. And there's an innate cost to the making of the house, which is also because salaries are high and wood is high and labor and all of these other pieces. And then even in building codes and things like that, these are all costs. And so you can't barely build a house for what it's being sold for. And so that keeps supply low, right?
Yeah.
If you're selling a product for basically what it costs to build it, people aren't going to bother to build it.
Yeah.
And so then there just isn't homes. And so everybody's got to live somewhere. Now, we can spread out like everybody lives in their own house, or we can all like bundle up and like you got grandparents living with parents living with grandkids.
Yeah.
But you still need a house. Like,
Absolutely.
so and that's the thing. It's hard to know, like, how condensed are we, right? Like as a nation, like how compact are we, or are we really spread out, right? Like I have no idea on that one.
Yeah.
Do you guys? Because if we can compact further, then we can create more supply by, hey, let's all get a roommate, right? And so then that creates more supply, which would then bring house prices down. But if we're already compact, and it's like, well, there's really kind of, a couple people already to every bedroom that exists, then
a big part of it is cultural too. Like the United States, like people want to have their own house. They want to have
it's
their
true.
own car.
Yep.
Like, so that's built into our culture and living the American dream, So that's also a force that pushes people into buying a house and not living with their parents any longer, having their grandparents live with them.
Unlike in Latin America, where it's very much normal to do that. Yeah.
Yep.
I think it came up on our last show. People are sharing beds, not just sharing rooms, but like in New York.
In New York.
sharing beds, unrelated people.
Yeah.
Like, what? Okay, well, there's a solution.
Not a solution I want, I suppose.
What do you guys think of the government putting caps on companies like Blackrock and others that buy up properties to use them as rentals? Do you think that's good for them to put a cap on it? Obviously, there's pros and cons to that.
Yeah, we're going to talk about that in another one of our articles here. Okay. So actually, let's jump to our next one. Again, from United States Real Estate Investor, commercial real estate disruption. Bold celebrity move could upend entire housing market. And I'll just read. So Jade Schenker, star of Netflix Owning Manhattan, advocates a bold shift from residential to commercial real estate, predicting significant market disruption due to high interest rates and limited housing inventory. My first question is, who is Jade Schenker? I don't watch Owning Manhattan. Do you guys watch that? Do you know who she is?
I don't.
No.
Okay.
Yeah, but yeah, go ahead.
Well, my next question is, how much influence does she have? We're in investing. We don't know who it is. Yeah. And it's saying bold celebrity move could upend entire housing market. What?
Yeah, again, I feel like that's more clickbait, right? Like that. I'll say the same thing I said last time on these clickbait stuff. It's like people are going to invest in something, I think, that makes financial sense, not what a celebrity says. I mean, like,
run the other way if a celebrity's saying some stuff.
But okay, I mean, there's definitely a lot of positives to investing in commercial real estate as opposed to residential, for sure. It's more passive.
Oh yeah.
It's longer terms. It requires a lot more capital.
That's true. Yeah, not everybody can do it, right?
That's what I was just told to get into. We have a big commercial agent here that I'm friends with, and he's like, dude, you need to be in development of commercial properties and buying some of those, because with our population increasing so much where I live, there's going to have to be more stores, more, more storefront buildings where people can go in and buy their goods and whatnot. So, yeah. And like you said, it's more passive.
Yeah. I've got a couple of buddies that work for, I'm totally blanking the company, but they're commercial real estate developers, managers, property managers, very smart people making boatloads of money. So
selling commercial real estate,
developing, selling, managing. Yeah. All of the above.
What's their advice on that?
Their advice?
Yeah.
I don't know. But there's different types of commercials. So I'm sure they're like, okay, office, we're getting killed over there. So we're going to do, warehousing or something like that, which I think is more what they do. So hard to know what they're thinking. And as the market's shifting, what they're going to do.
Yeah.
So, yeah. I see Antonio put Ryan Serhant's link in here.
Yeah, which I know Ryan Serhant.
Yeah, I think Is he part of the
Owning Manhattan? Is that his show?
I think so. It sounds familiar. I follow him on Instagram too.
Yeah.
That guy's a baller. Well, let's go to the next article from International Banker. The family office boom is proving hugely positive for alternative investments. And just a little background for people that don't know that term, family office. It's basically families that have a lot of money will basically hire specialists, asset protection, taxes, tax strategy, things like that, bookkeeping, that are on staff full time, basically. So that's what they're talking about, that increasing. It actually says there was an increase of 21% and a rise to 4,592 family offices. Don't know where it started. And those family offices give advice to these families on where to spend their money, how to protect their money, number one, and grow it too. So they'll get into things like private equity, venture capital, and they're moving away from stocks and bonds, or at least adding more real estate, sounds like.
Okay, so that's the point of that.
Yep.
I'm gonna.
So we've actually, we work with accredited and non-accredited investors, and they're not necessarily, ultra rich. None of the investors we work with are ultra rich and can have a family office, but we've partnered with a group to create a virtual family office. So they get all the services, and it's, multiple people are using those services. And the reason we created that relationship is, I don't know all of those things. I know real estate and my lane in real estate, but our investors oftentimes need to talk to a team of people to really get their head around like where they're at and what's the best direction to go. And if real estate is a good part of that plan, great, then we can help them. So
they're increasing their wealth by having a team of people that are advising them directly.
Yeah, exactly. They're getting good advice from a whole team rather than, like I said, I know real estate and I know our lanes in real estate, but I can't take a snapshot of their entire financial situation. So that's why we've partnered with a team that can do that virtually.
How much should your
I've actually met it.
Oh, go for it.
No, I was just going to say it kind of useless, but I've met a couple of guys who actually work for some of these family offices.
Mm-hmm.
From a W-2 standpoint, it seems like a really cool gig where you like, yeah.
Where you what?
Well, where you're just like, you don't have, they're providing you, hey, here's all of our resources, like, let's make good return on it. And then, they're playing with it basically. So,
yep.
Okay. Yeah. I wonder what kind of net worth you should have before you
start doing that. Probably pretty significant.
Well, it's
larger than mine.
Yeah. Well, that's where this virtual family office comes in. You don't have to have a net worth of, 200 million or something and be able to hire a dedicated team. This is kind of an a la carte kind of thing. So, pretty much anybody can have access to those kinds of resources.
What's that cost to do that?
There's different pricing structures. And I know the team we're working with is putting together something that is more affordable for somebody that's just kind of getting started. So
interesting. Okay.
Yeah. If anybody's interested, I can put you in contact with my guy there and at least have a 15-minute call to see if working with them makes sense. And then they usually do like a 90-minute call just to really dive into all the assets and the situation to see also if it just makes sense to continue forward. So
Yeah. Okay.
Yeah. Yeah. I was going to say something else. Lost it. Anything else you guys wanted to add to that?
No, I'm not very versed on that.
Yeah, it's all good.
First time I've heard.
That's what I love about this show. We all kind of learn as we go.
Yeah. Like, I guess the one thing that I was interested in is that this topic before, if you're okay with the commercial stuff, because that might be, I don't know. I mean, I think people have been afraid of commercial, but it might be something that's, I'm going to be looking into it more myself because I want to see exactly what's going on with that. And yeah. Anyways.
Yeah.
Yeah. I mean, I think the way I perceive commercial is I think that it is not quite as flexible and versatile as residential. But it's more passive. And so depending on how and what phase of life you're in, it might make sense for you to move to something more passive as of something more active, because leases are longer. Maintenance on commercial buildings are done by the tenants, not by the owner, at least most of it. And so it is more passive, but it does require a lot more capital to get into it. And so getting into commercial, which, for the record, I don't own any commercial properties, but I do intend to, as I move my portfolio and later in life, move it. My plan is to move it to more commercial properties.
Yeah. Yeah. That's usually the life cycle of investors, right? Active, single family. Then you get to where you're like, oh, I'm going to place your money into multifamily or self-storage like we help people do. That's also a good starting place too, because like usually a minimum of 50 grand, you might have that in an IRA, but like for one of our rent to own deals, if you're an investor, you got to have 20-25% down on as an example in Denver, $500,000-$600,000 house. You got to have $100K plus you got to go get a loan, right? You're going to make more money that way, but not everybody fits that. So you could start either way, but usually that life cycle of investors moving more towards the passive. They want to be able to just go on vacation with their family and retire. And then maybe they get into a DST, a Delaware statutory trust deal. It's a whole nother conversation, but yeah.
I just read that article, and one thing that she had mentioned is like, it's a giant Black Friday sale, like 30, 40, 50% off of the values that they normally had, and that it's paid the same price for 20 years, that there's a good chance that it'll go up. So that is definitely something to think about for sure.
Yeah. Well, I remembered what I was going to mention on that last article too. Just so people understand, if you're working with a CFP, a certified financial planner, they legally aren't allowed to recommend real estate to you directly. They can hint at it. It's kind of gray area. Also, they don't get paid on that.
They're not motivated to.
They're not getting their cut. Stocks and bonds, gold, whatever. Sure. So follow the money. There's a reason they're not.
Argumentatively, I would even say that they are motivated not to. And I've on my podcast, I've had a couple financial advisors that have stepped down from financial advising and moved actually over to real estate because they're like, the returns are so better, and they started feeling guilty about like not being allowed to like advise on real estate. And so they stepped down from there and are doing more like general networking and general, so they can advise on both. Cause there's definitely pluses and minuses to both sides, right? Like like real estate, as much of a fan that I am of it, there are a couple things that are like downsides on it. And there's an upside to just being able to throw your money in a 401k or some kind of S&P 500 and get some returns on it and not have to think about it or really, worry about toilets getting plugged and all of that kind of stuff. So there's value there, but it would be unfair. I think it is unfair, I think, to call people financial advisors that aren't even advising you on a major sector of financial investment, which is real estate. So I think that it's a misnomer, and they've done a better job than us real estate agents at branding themselves as total financial advisors. And I'm like, that's a lie. You're not. Yeah. You're one half of it. But we got another half all the way on this side. So
yeah, it seems like a crime to cut out all that. Yeah. So my suggestion is find somebody that's fee based, where you're paying just a fee. If they're not charging you an upfront fee, they're getting paid on the backside. So they're not aligned with good advice for you. Or go to a wealth manager that's not a certified financial planner. So that's my advice. Let's see. Should we go to the next one?
The Blackrock article?
Yep. Here we go. From Financial Times. BlackRock's private market EFT ambitions draw skepticism. So they're talking about them acquiring Preqin. It's a UK-based private market data group. And sparked skepticism, I'm reading this, among industry experts about the feasibility of launching exchange-traded funds that incorporate illiquid private assets. So I have no idea how that all works. Do you guys know how ETFs work and how real estate would work or not work?
Wouldn't it just be like a REIT?
It sounds like it, yeah, but
yeah,
an ETF must normally have to be more liquid than a REIT.
Yeah.
Well, let me read this other thing. This is an anonymous source. They said a couple of things. They said, I don't think launching ETFs was the reason they bought Preqin. I don't think they have an intention or desire or pipeline to do it anytime soon. And they said the bigger picture was that BlackRock was transforming away from being an asset or money manager into a full service financial company, building on initiatives such as its Aladdin risk management platform by expanding into indexing and data. So take that for what it's worth.
Yeah.
I don't know.
I'm trying to read it and figure it out while we're talking because I don't.
Yeah, I dove into it last night.
I don't really know much about it either.
Yeah.
So.
Well, let's pass on it, and we'll take a break to hear from one of our sponsors, and then if you guys read that and something else you want to add when we come back, let's do that.
If you're listening to this, there's a good chance you work within the real estate investing industry. There's another good chance that you would like to increase the sales of your products or services. Well, you're in the right place. United States Real Estate Investor is a platform you need to place your brand directly in front of your target audience. With our focused, growing audience of real estate investing beginners, enthusiasts, and seasoned professionals, you can continually reach our captivated viewers and listeners with ease. To learn more or to get started today, just visit UnitedStatesRealEstateInvestor.com/advertising. That's UnitedStatesRealEstateInvestor.com/advertising. Get ready to increase your brand awareness and your bottom line. Attract clients with content.
All right, let's get back to the news from Morningstar. Investing in real estate isn't all it's cracked up to be. It says research shows that real estate's returns have been more dependent on income than capital gains. And I've got a few things to comment on this, but do either of you guys have something you want to add to that?
I'd like to see their numbers.
Yeah,
real estate has been really good to me. So I think that more people should own real estate and more people should invest. I think that probably people don't factor in all the values of real estate, especially when looking at even as simple things as like renting versus buying. I think the number comparisons, people don't fully take the value of real estate. Oftentimes I see that cash flow is like the sole measure of real estate, and that's not a good measure of real estate. And or inversely, real estate is measured, like CapEx or whatever, and there is no measure of debt leveraging on it either. And so I think that real estate is all and more that it's cracked up to be. In fact, I would say that it's more than it's cracked up to be. That's what, but I mean, it's hard to argue against just a title, because it's like, well, what do you mean it's not all that it's cracked up to be? Do you mean that like somebody told you wouldn't have to like work hard? No, you're going to have to work hard. Is it mean that like that they think that the ROI isn't there? I mean, well, what ROI were you expecting? And, what ROI did you have on your property? Like, can you buy a bad deal? Yes, 100%. You can buy a bad deal in real estate. But I think I just saw an Instagram reel about somebody like trying to compare like, okay, well, grandma's house that they bought for $40,000 in the 60s or whatever, it's worth 450 or 550 now, and he does some numbers and he's like, look, it's only a 6% ROI or something like that. The S&P 500, you would have had, $1 million or $2 million if you'd invested in it. And I was like, okay, well, no, like you did not you just took price of home before and price of home after and said, well, if I invested all of that money at the very beginning, but people can't do that. You don't have just like the $400,000 sitting on the sidelines when you buy a property. I get people in for buying their first primary for $5,000. Like, if you put $5,000 into stocks, I mean, you're not getting that much. I'm sorry. No. So versus being able for $5,000 to control a $450,000 asset that you can rent out, I don't think that there are better returns on that will probably appreciate over time, that distributes your small amount of capital outside of the dollar and puts it into land, as opposed to, keeping within the American currency. Yeah.
Go for it.
I was just going to say, Jason or Nathan, did you have Brady Mullen on your show?
Sure did. Yeah. He was the financial advisor that like stepped down and moved over to, great guy. Yeah,
he's brilliant. I've known him a while and had him come on and kind of go through his presentation for our investors so they can see that it's not apples to apples.
Yeah.
Like you mentioned, leverage, huge thing in real estate. You're not taking advantage of with stocks. And then tax write-offs, depreciation.
Yeah.
Start adding all those. And then he shows those graphs. It's like, oh yeah, it seems like it's the same until it's not. And then it's like, holy shit, real estate just blows away.
Yeah.
Stocks over a long time.
Yeah. So to give a real life example, right? I bought a duplex with my wife. I bought it for $190,000. We put down 10% on that, and then we rented it out. And everything was covered except for like $300 on our mortgage while we were living there with the tenant. Fast forward 2 years, we move out of it. We start cash flowing $300, right? The next year we're cash flowing $400, $500, and then we eventually paid it off. But in that time period, since we owned it, $190,000 of buying it, putting 10% down on it, the value has gone from $190,000 to $600,000. Now, if we wanted to, we've gotten all the tax benefits from the depreciation. You can also do a cost segregation study on that, but we could also refinance it out, take out $200,000 of that, and we wouldn't have to claim that $200,000 as income. And that $200,000 can be paid down by our tenant, not by us. So there's just so many.
Yeah. And okay, so you said you put down 10% on 190.
Yeah.
Is that right? So
Yep.
$19,000.
Yep.
And the thing is worth 600 now?
Yeah.
In how many years?
It was 8 years. It's been 8 years.
Yeah. I don't even know what the ROI on that is. That's a lot.
Yeah.
That's what that is.
Yeah.
You know, I mean, I think you probably wouldn't even have that good of ROI if you solely bought NVIDIA. Like,
yeah. But then I'm also
maybe, but
just like you said, I'm in control of a $600,000 asset for essentially putting $19,000 down, and that the equity, let's call it 400,000, doesn't even include the cash flow that's come from that, right?
And you mentioned you mentioned it really well. You're like, the first year it's 300, the next year it was 400. Why? Because you're raising rents. And a lot of people fail to recognize that rent isn't fixed on a property. Yeah. Rent moves with the economy. So whereas your mortgage is fixed on a property, your rent is not, which is why you shouldn't be renting. If you're listening, you should not be renting. Like, I don't care what time of the market it is. If you're renting, you are in 100% a worse position than if you bought. Even at the height of 2008, that would have been the right decision for you financially to buy a house at the beginning of 2008 if you were renting. Now, maybe it wouldn't have been the best financial decision for you to buy a rental property in that exact moment, but moving from a renting position to a home ownership position as a first step, the numbers make so much sense because you're going from 100% loss to partial gain. And that's the reality. And you're setting yourself up to own at least something, which is locked in for the next 30 years. So,
and that's the point I wanted to make right there is you're 30. So you buy a house, right? Say the mortgage is $1,000 the first year that you buy it, but you rent out one of those sides for $800. Then you increase the rents. Then you move out of that duplex, right? So now you're getting $800 for both sides. The mortgage stays at $1,000 for 30 years, but my rent is increasing 10% every year after that, and I'm not paying for it. The tenant is paying for it. And in my mind, rentals are recession proof because people need food, shelter, water, right? And so they're not going to give up their housing. They're going to make it work. And at that point, like, once the rents get to that level, like, honestly, those sides could rent out for $1,600 a month, which is $3,200. And my mortgage on that is $1,000 on there. Like, even if I had to go down because the economy crashed something like $400, $500, I'm still cash flowing $1,000 on that by decreasing the rent by $1,000. So I get this question all the time. People are like, how should I get into real estate investing, James? I'm like, well, you're a married couple, you have no kids. Do not buy a regular house. Buy a duplex, or triplex, or a fourplex. Live in one side and rent out the others. Oh, but we really want our own house. Do you want to invest in real estate, or do you want to own your own house? Because you
don't get your cake and eat it too. 100%. Yeah. You have to buy the right property.
Yeah. And one of my friends is like, God, I wish I would have taken your advice when that happened, when we talked. But of course, I wanted my own house, my own space and everything. I didn't want to deal with a renter. And now you're here.
Want things now. You know, it's like, I think all good things come from sacrificing the current position for a future gain. And that's whether you want to go on a diet or lifting weights or, you know, even having good relationships. That's, you know, sacrificing your own desires to give, you know, emotional energy, support, all of these things in the current for the long-term support of that relationship. And it goes towards finances too. You have to be willing to give up something. There's no such thing as a free lunch. You can't just expect to live in the house that you want to right now. I tell people this all the time. I've bought over 10 homes at this point, and I still haven't bought the home I want to live in.
Yeah.
You know, and that's a decision I make because I want the future, right? Like I'm sacrificing the current for the future. And that doesn't mean that I'm living, you know, under a bridge in Denver, but I'm not living where I want to live.
Yeah.
Yeah. Antonio, our producer, put in the comment, Grant Cardone swears by renting. That's
He does it for the clickbait.
yeah, and he has a point. I mean,
real estate, like
if you've got a bunch of money and you can also invest and make a good return, and then rent where you want and have the flexibility, I can kind of see that. But I'm with you, man. Like, there's so much.
No, I think like, and what's funny is that like he's from a different perspective, right? Like the guy's net worth is massive, not gonna lie, but he still owns the houses he rents. He just buys it through a freaking LLC. He's full of BS.
Yeah,
full of BS. That's my opinion, right? Like, it's like, okay, well, you can't just, unless you're like Grant Cardone and the banks are like, well, whatever you say, like you're not going to just start a new LLC and the bank's going to give, a $500,000 loan to that LLC. Your best option for getting out a loan from the bank is as a primary, because those are subsidized by Fannie Mae and Freddie Mac, and you are going to get a lower interest rate. You're going to get the best conditions that you possibly can with the income that you have. Yeah. And that's who you are. Like, so buy a primary house, and you can buy up to a fourplex. Now, your numbers, James, are slightly different in Arizona, it sounds like, than Colorado, because the truth is the average person in Colorado, unfortunately, probably can't just start off and buy a duplex as much as you would like to. But that doesn't mean that you can't house hack. And there's a lot of ways to get around that, whether it's, finishing up a basement, finding a way to rent out a room. And I've got couples that have done it and are willing to do it. And it's like, hey, we're willing to sacrifice current. We only need 1 bedroom and we can buy a 3-bedroom house. We can't buy a duplex, but we can buy a 3-bedroom house. So let's rent out the other 2 bedrooms to people and help, help with that housing costs and paying down. On my website, I have a calculator that helps people calculate. You can put in the rent by the room on the individual, and then you can see the difference between choosing to house hack versus just buy a primary and, your favorite, house by Wash Park or whatever. And the numbers are astronomically different. The difference between renting and buying over a 30-year period. Any guesses on a $500,000 house at 6.5%?
No, what is it?
With 5% down, it's $6 million. Sorry, $3 million. $3 million.
That's wild.
Yeah.
You know what a lot of my friends' parents did is when their kids went to college, they bought a house and then had their friends rent rooms from them. And then the kids would stay there for 4 years, and then they would sell the house and make good profit or keep it as a rental property. Yep. And I thought that was like such a cool idea after looking at that. But the one thing I wanted to say is when you buy a duplex and you're going to live in one side and rent out the other, the lender will, and you can help correct me if I'm wrong, Nathan, but the lender will contribute part of the earnings from the other side being rented out towards your affordability for that property.
That is correct. Yeah. So as of November of 2023, Fannie Mae and Freddie Mac guidelines allow for up to 75% of the other units rent costs to contribute. Before, you used to only be able to purchase a fourplex through an FHA loan. And the FHA loan had a lot of regulations around it. It had to meet some really hard guidelines. And so it was very rare for it to actually work, especially here in Denver. I can't speak to other parts of the country. I think probably other parts of the country, it was a little bit more lenient, where you have like less appreciation, but more cash flow. And I think that you see this is like kind of a side, but in general, I think that there's kind of 2 housing markets. You either have cash flowing markets or you have appreciating markets, but you rarely have both an appreciating and a cash flowing market, because appreciating market means that the cost is continuing to go up. So when you purchase it, the rent is just lagging a little bit behind on appreciating markets versus cash flowing markets like St. Louis, for example, where you really haven't seen much appreciation in a while. But the property's cash flow, because it's become balanced. And so in order to make a property worth purchasing as a rental, because people still live there. But yeah, so very recently you can do a conventional loan on up to a fourplex at 5% down, 5% down up to a fourplex. And you can use the other 1, 2, or 3 units in 75% of the total rent value of those. And it is a little tricky though, and it is kind of hard. The things that you still have to worry about and look at are, what are those units currently being rented for? Because the appraiser will do, even if they're under market value, they will use those current rents as opposed to potential rents. They won't use potential rents, unfortunately. So if you're finding one, which most, I mean, if you think about it, most fourplexes and duplexes that are being sold probably have under market rental tenants in them because they've been there for a long time. So it is a little bit more challenging in that regard. You also, for buying it as your primary, one of the units has to be vacant. And so you have to figure out a way to create one of those units to be vacant. So you can't have year leases on all 4 of the units. So those are some 2 big, speed bumps that you have to get over in order to do that, but definitely possible. Me and a partner actually did it in January of this year, bought a fourplex using those same guidelines, 5% down, and that's here in Denver, and it cash flows.
Yeah.
There you go.
Day one. So
I'm glad you brought up the thing about the cash flow markets versus appreciation. I was going to bring that up too. And that really goes back to the point of this article where they're saying returns have been more dependent on rental income than capital gains. Well, every market's different, and not every investor may be just going for
cash flow.
Yep. Some may want appreciation, and maybe don't want to invest in the Midwest
or the tax benefit.
Yeah. There's a lot of factors. So. Yeah. Let's go to our next article from. Oh, go ahead.
Oh, go for it. I just got a question. Nathan, you had mentioned St. Louis being a good cash flow market. What other markets are there out there, or is there a way to easily look that up?
I think I will say that that's not my expertise. I spoke about St. Louis because my brother lives in St. Louis, and I purchased a duplex with him out there. He manages it, and that was something that I did to help my younger brother out get into real estate in the beginning. So I've dabbled in the St. Louis market, so I can speak to that market more than I can. But I'm not the person who studies like counties and cities and states across the U.S. to try to find the best cash flow markets. But I think the way that you would do that is you look for home prices compared to rentability, right? And go on Rentometer. How much does this rent for versus like average home sales? So you could do like a really rough, very easy estimate, like average home price in this county. Boom, that's a very easy stat to find. And then just go on Rentometer and find 5 or 6 rentals that are at that price point and be like, okay, well, that's what it would rent for. And then you have a ratio, and then you just do that for as many different states as you want to compare. But I really encourage in-state investing. Like, where are you living? Invest there, because I think that far outweighs the advantages and disadvantages. The advantages far outweigh the disadvantages for however difficult the market is. I think being present and being able to, especially as a new investor and somebody who's not terribly experienced, being able to like visually see your property on an occasion and visually talk to your tenants instead of trying to do it over the phone or, all this stuff. You're learning, you're going to make a lot of mistakes. It's going to be a lot easier for you to be present than trying to do it all out of state. And I think that if you're trying to invest out of state, you're going to wind up with a lot of headaches unless you do it consistently and do it a lot and have upgraded yourself. I would say that it's a further step beyond investing where you live. Invest where you live first. And then if you really want to, you can begin to build out a team and people that you trust to invest out of state, but probably easier to do syndication deals than to try to do it yourself out of state. That's my opinion.
Yeah,
I agree. Yeah. David Green wrote a good book on long distance real estate investing through bigger pockets.
Mm-hmm.
I've read it, but man, if you're not there, you got to have some good systems.
And he
lays it out,
doing, right? Like he developed his systems in state before he did out of state investing. So it's almost
Sure.
like, well, I get what you're saying, but like, you don't just read a book and learn how to do all this stuff. Like the best thing you can do with real estate is get your hands dirty and buy a freaking property.
Yep.
And you'll learn a lot. So do it where you can drive to it. I would even argue, like, I don't even want to invest in the Springs. I live in Denver. I don't want to invest in the Springs. I keep all of my investments on the west side of Denver. I'm like a 25-minute drive, all of my properties.
Nice.
And I'm gonna except for the St. Louis one, because that was my brother and he manages it, and that's different. But that's probably where I'm gonna stick with too.
Yeah, me too. For the most part, I think.
West side of I-25 in Denver.
Well, no.
Yeah, I'm giving you a hard time.
25-minute drive, yeah.
Yeah.
So, because I've thought about like selling some of my other properties that don't like cash flow as good as I was hoping they would, relative to the price I was spending, and going into other cash flow markets and buying cheaper houses and doing that. But to me, it just sounds like way more than what I want to do at this point. I don't know.
Yeah.
Yeah. Let's jump to our next one from United States real estate investor. Biden 5% rent control threatens to kill real estate investing growth. Oh boy. There's lots of comment on this one too.
Yeah.
What, July 20th was written?
Yes. And I'm sure, we've got an election coming up, so I'm assuming nothing's going through. So we'll see what happens. But rent control. Well, let me back up. So this is actually a cap on rent increases for corporate landlords managing over 50 units. I'm assuming that's Blackrock, like we were talking about before, right?
Yep.
So, that's not going to affect us small guys, which I guess is good. That.
Well, I don't know that it wouldn't.
It's one step towards it.
Yeah,
there's
exactly.
trickle effects in anything that we do.
Yeah.
I would argue that a policy like this is going to affect people that don't even own real estate.
Yeah. Well, especially renters. So like back to this comes up all the time with the rent control. When you look at the net effect, it hurts those renters because investors aren't willing to put more money. Like James, you were saying, if you can't increase your rent, you can't save up money to improve the property.
Exactly.
So you're hogtied. And so that's going to hurt that renter because you've got a deteriorating property.
Yeah.
And no one's going to go build new properties if they're limited too. And so then your rental pool is smaller, rents are going to actually go up. So it's a fail, but it's so frustrating because it comes up all the time. Like no one sees I think maybe the politicians are like, they probably don't get it for one. And they just think, oh, I can run this on my platform and people are going to get behind me. Right.
Yeah. So, because it feels like, oh, these big corporations don't need more money.
Yep.
The little guy who's renting a place needs more money. So we should redistribute wealth in that way. But I think that when we enact policies top down, that rarely actually ends up being the effect. You know, I would rather see policies that encourage and help the small landlord. Small landlords are able to be more mobile and flexible. I rent to some tenants that I know could not get into some of these places just because, you know, either their income isn't quite what it should be to like that meets this thing, or they've got a credit hit, but I know them personally, right? And so I am able to take a risk on them via a recommendation by another friend. And those have often turned out to be some of my best tenants. And as a small landlord, I'm providing something for them that they wouldn't actually be able to get otherwise. And so I think finding ways to encourage small landlords and show that being a landlord is a business and it can be run and done ethically and well, and providing a much needed service for people that are in transition phases in life or early phases in life, or just in a situation in which they need to recover from divorce or some other, situation that has shook them. I do think that home ownership should be like the goal for every renter. Not everybody sees it that way, obviously, and there are definitely lifetime renters, but being able to be a landlord to help these individuals towards that end, I think is much better than trying to like emulate a policy that just, attacks, or that at least claims to attack the big guy, right? And it could be like, well, yeah, I mean, but I don't know. I think rent control in general is a slippery slope that you get to, and if somebody doesn't want to rent a place, they shouldn't have to rent it, and that usually should be enough to keep rent reasonable, right? The reason somebody's renting a place for that much is because they want to live there and they're making a conscious decision. It's a free market to pay that rent to live in that spot. And so saying, well, we have to have these things rent for less, I don't know. I just think that the free, I think the free market does the work that it's meant to do by when you post something, and I do this all the time. I post a rental property, new one opens up, I post it a little high, maybe, or maybe I post it too low and I get a ton of attraction, but maybe I post it a little bit too high and then I'm like, okay, I need to drop the price.
I did. I just had to do that. Yeah. There's two reasons why I think this happened. Because when real estate prices went up, then they could raise their rents, and people were getting, $300, $400, $500, $1,000 adjustments in their rent to renew their lease, and they were having to move out of that house, right? Yeah. So that's a big reason for that happening. The other reason for that happening is there's more renters than there are buyers, and they're the ones that are complaining and saying, now I got to move out of this area. I grew up here. Like, now I can't afford it. And they're looking at it as cool. There'll be a rent cap on this, and then I will still be able to afford the property I'm in. So if they really want to do rent control, they got to do something with the price control of how fast real estate goes up in value, because that's direct correlation to the amount of rents.
Yeah. But I don't think that we should cap real estate growth.
No, but there's ways to moderate it. I mean, when you throw interest rates down to 2% and 3% for buying that's just going to totally increase the value of everybody's property.
The raised rent is the consequences of having low interest rate.
Yeah.
Agreed. So inversely, if we want to, I think going back to and this is something that people, I just don't think that they understand, supply and demand. If we could create affordable housing, and I don't mean like programmed affordable housing, I mean like building homes that are costing less to build.
Yeah.
okay, I purchased some land. I'm building a duplex on it. I'm going to split it and sell each side separately. I've been back and forth with the city. Now I'm learning some things too. So maybe some of this is on me, but a lot of it's on the city. Back and forth with the city for over a year.
Ooh.
Dealing with permits. And we haven't even begun construction yet. So I'm 9 months once we begin construction. So I'm probably selling this home in 2025. So I'll have held the property for like 2 years by the time and maybe even a little bit. And so my holding costs on this property are, around $3,000 a month. So what is that? 3 times 12, that's 36 times 2, 36, 60, $65,000.
Ouch.
I'm not making that 65 grand. And this is what people don't understand. I'm paying the banks for it because I've borrowed money for the land. So the city, when they're like, hey, they're making me pay a tree tax. I have to pay like $5,000 to have a tree cut down so that somebody somewhere can plant another tree somewhere else. I've planted 400 trees myself in Mexico, like when I was a kid. But that doesn't count, right? Like, so these are the city taxes on this stuff is huge. So if we really wanted to increase affordability, I should be able to build a house for less, but they're making it more difficult for me to build, which causes less people to be incentivized to build. So then that means home prices go up because I can't sell it and I knew this going in. So it's calculated into the home sale. Like that's where it ends up. That 60 grand, it ends up not in the city's pocket, not in, my pocket. It ends up in the bank's pocket for having a loan for, 2 years because the city dilly-daddled. And they don't care because, they don't care. They're the city and they're like, here's revisions. You got to do this. You got to do that. And it's like the developer is the bad guy where we should be incentivizing development if we have a house and like, let's build more houses at an affordable price easily, which will then allow us to provide affordable housing. Because if there's 100 houses on the market and only 10 people trying to buy them, I guarantee you that it's a race to the bottom on selling those homes.
Yeah.
But if there's 110 people that are trying to buy 100 houses, it's a race to the top on who will offer the most. Which would we rather have?
Mm-hmm. You want the...
Should I get off my podium now and rant over?
No, you're good.
It's good stuff.
Yeah, that's my thought.
Yeah.
Regulation.
Let's keep things moving from Mansion Global. What's driving wealthy Americans to Tokyo? So they mention favorable exchange rate, robust economic prospects. I don't know if we're talking about people working there. Vibrant culture, exceptional dining, and modern amenities. So
about the only thing I know about Tokyo is incredibly high density. That's about all I know.
Yes.
Incredibly high density.
So there's an absence of property purchase restrictions for foreigners. So
why is there cheap real estate in Japan right now? Antonio just put that in.
I don't know that it's necessarily cheap because I think they're talking more on like the luxury end. Let's see. But yeah, I know their economy's kind of faltered. Not sure what's going on there. I didn't really dive into that article a whole lot or know anything about Japan. So
I haven't heard of any of my friends saying that. They've said Costa Rica, but
yeah, for sure.
Yeah.
Well, let's go to the next one from WCMH via Yahoo News. 230-acre development deemed traffic nightmare by locals moves forward. This is in Delaware, Ohio. The Planning Commission approved this it looks like infill. So there's other areas around it. So it's not like out on the outskirts. So it's going to cause more traffic congestion. The development's got multifamily, single family, different amenities, it says. So, and apparently the traffic was already bad. So that sounds like putting something in Denver where it's already bad.
Yeah.
And it would just make it worse. But
it's happening here too.
Sure. Right.
Yeah.
I mean, I think this just goes back to kind of what I was talking about. Like, you read articles like this and it's like, they wouldn't be building this if there wasn't a need.
Right.
Like I don't think, I think that there's a housing need, right? And like it even says like a need for new housing. So how do we navigate that need of new housing and building? And it's like, well, yeah, with new houses comes building new infrastructure and providing all of that, but people don't like change. I mean, that's in general, that's hard for all of us to embrace and accept is additional change, you know?
Yeah.
But we are a growing nation, and that's a reality. Like, I think this year's growth in the United States surpassed our annual growth for like the last 10 years or something like that. So we grew even more this year than we have in the past. Between, and there's, we grow in multiple ways. One, immigration is one way we grow, and another way we grow is through, the citizens of the United States having babies. But we're growing.
Yeah.
We're a growing nation, right? And so that means we need more housing. That means we need more infrastructure. That means we need stuff like this. So yeah, I mean, it's all in how you frame it. This literally could be something that causes house pricing to go down because now there's more inventory. So it's like, this could be a good thing, or it could be a lot of traffic and need, fixing up of the roads and creating more infrastructure in that way. Like, who knows?
Yeah.
Yeah. Have you been to Portland recently? That thing's nasty.
Oh,
No.
really?
It's terrible.
It's like traffic.
Oh gosh.
Yeah.
Terrible.
Yeah. Yeah. It's a double-edged
Dallas
sword.
traffic. I've experienced Dallas traffic.
It is a double-edged sword, and you just have to be ahead of it, right?
Yeah.
You have to have the infrastructure and the thought process of, and if the town's they want more development and they want more subdivisions and they want more houses to help the community with their housing crisis, they first need to put in plans for infrastructure of roads and making sure that works out instead of being like, oh, we messed up.
Yeah.
Here.
It's usually just Band-Aids.
Yeah.
After
exactly.
the fact.
Yeah.
Yeah. Yeah, it's tough. Like, I mean, I've been in Denver since '92. I've seen it just grow.
Yeah.
And the traffic just become awful where I'm like, do I even want to live here? And a lot of people feel the same. But at the same time, there's a lot of opportunity in real estate. I'm like, I don't want to leave here because there's good and bad. Like, it's just how it's going to go down. So, well, let's take another break for our next sponsor, and then we'll finish up after the break.
Are you looking to elevate your business through exceptional content? Universe Media Publishing is your gateway to success. We understand that in the world of business, content is king, but not just any content. Your business deserves content that captivates, convinces, and converts your audience into clients. At Universe Media Publishing, we specialize in crafting SEO-rich web content, persuasive copywriting, and marketing copy that resonates with your audience. We don't just write, we engage, we connect, and we deliver results. Imagine your brand's voice amplified, your message crystal clear, and your presence dominating the digital landscape. That's the power of partnering with Universe Media Publishing. Don't let your business just blend in. Stand out, be heard, and make an impact. Connect with us at Universe Media Publishing, and let's turn your vision into reality. Visit universemediapublishing.com today. Your story, our expertise. Together, we'll create magic.
All right. Thanks to Universe Media Publishing, run by Antonio, our producer. He is amazing. So let's go to our next article from South Florida Sun Sentinel via Yahoo News. At a loss for words, families must move out as nearly 200 more condos are deemed unsafe. So this is in Pembroke Pines. It's a 25-acre property. It's got 304 units. I guess everybody's got to move out, so that's not good. I was thinking about this too. Like, we're shifting into co-living, renting by the room, and our partner is in that same area, so they've got a handful of properties available. So people that are having to move out of a place like this, the co-living could be a good option for them, affordable option too. So, any comments on that one, guys?
I can pull it up real quick and look. I'm sorry, I'm trying to.
I mean, I think it kind of speaks to what we've been talking about, actually, with the article goes on to say how they are having a hard time finding places to rent at the price that they were renting at before.
Yeah.
It's because there isn't housing. Now, why these 200 condos were deemed unsafe sounds like, that isn't obviously for me to judge. That's the structural engineer's job, and they deemed it was unsafe. And so we don't want another incident in which an apartment complex collapses and kills people. That is a horrible thing. And so, I think this is the right move. It sounds like, right? But then it does pinch housing needs even more, right? Where you have we just removed 304 units off the market.
Yeah.
So, how are we going to resupply those?
400 residents, I mean, if you take 2 per room.
Yep.
Yeah.
Yeah.
Yeah, that's a big influx. Boom, all of a sudden.
Yeah. Hopefully they have insurance or something like that to cover the people that were living there, their needs and whatnot,
Mm-hmm.
Yeah. Antonio says could have been another Florida collapse.
Florida collapse?
I think maybe he's talking about that.
Like said, maybe what was it, a year ago or something?
That Miami nightclub. Is that what? I don't know. Let's go jump to our next one from Business Insider. Nobody wants to talk about it. A market shifting real estate trend is hiding in plain sight, and these 5 states will benefit most. Ivy Zellman, a renowned researcher, warns that increasing extreme weather events and related costs could drive migration from warmer Sunbelt states to cooler Midwest regions like Ohio, Michigan, Illinois, Iowa, and Wisconsin. So,
yeah,
that would make sense.
It's been talked about quite a bit, with that, especially with the rising water levels and whatnot.
Yeah. Oh, and Antonio says there was another apartment building that collapsed in Florida. So,
yeah, I think it was a year ago, and several people were killed.
Yeah.
I
Too
remember
bad.
reading about it.
Yeah.
So, I mean, that article was in Florida as well. So probably more in tune and more aware, and don't want a repeat of that for sure.
Yeah.
Yeah.
Another reason not to cap rents and handcuff a landlord that maybe would have put money back into that infrastructure so that didn't collapse, right?
Mm-hmm.
Who knows? Maybe they weren't even aware that there was a problem, but yeah.
Yeah, I've had a lot of people moving to Missouri and whatnot as well from here, which is kind of crazy. You would think, but they say the weather's pretty similar, maybe a little bit colder during the winter, a few more storms, but that's it.
Yeah.
Yeah.
All right, from the Denver Post, where Nathan and I live, Metro Denver flooded with new apartments, but renters snapping them up. I was wondering about this because I mean, this has been a city of cranes just everywhere, right?
Yep.
It still continues to be. And
Yep.
I'm like, okay, there's got to be a bubble, right?
We
Where,
are building. We're
yeah,
trying to keep up. Yeah.
yeah. So many people want to move here. So
And are those developers making good money on those projects? Then?
apparently there's demand
Yeah.
remaining. So
I talked to a developer, I don't know, like this month. She's got 2 or 3 high rises going up in around Denver. And I was like, are you worried? The question I asked her, like after chit chatting a little bit about it, was like, are you worried about filling those spots? Like from a rental perspective? She was not. And I was like, okay. And she was like, yeah, no, the ones we've brought on the market consistently fill up. Which means that there's demand, and building an apartment complex, obviously that's like pales in comparison to my duplex of 2 years, right? Like these are like 5-6 year long projects that people are from start to finish, right, on these things. And so it's hard to know what the market will be like when they're finally like coming to the market. Like you're trying to predict so far out in the future. So maybe we will get to a point where we've overbuilt in Denver for apartments. At least for how much our infrastructure can support, but I don't know. I mean,
it's in the article. It says it's driven by younger renters moving to the area
Yep.
for job opportunities, but they're unable to afford a home, which is definitely a thing. So what else are they going to do? They're going to rent.
Yep.
Have you guys heard of RFK's? I think that's how they say the name. RFK's idea that new homeowners would get a 3% rate on first-time home buyers, but it absolutely had to be their own home that they were buying.
Mm-hmm.
And as long as they had like a rich uncle or a parent or someone like that co-sign on it, that could be something that'd be good for young people as well. And then I think with those bigger developments like you're seeing in Denver, they're apartments now, but maybe they could be converted over to condos if they needed to sell and put more influx into the system.
Yeah,
true.
I mean, our vacancy rates in Denver are pretty minimal. I have no issues filling up my rentals.
Yeah.
Sometimes I list them a little high accidentally, right? Like I think this in this area will rent for, $1,600, and then I don't get as much attention. So I drop it down to, 15, and then it's filled.
Yep.
Right.
Yeah.
Like I listed a property this week. It's filled already.
Yep.
So tenant's moving out on the 30th. She's moving in on the 1st. Like that isn't vacancy. There's like that, right? Like 1 day of vacancy. So, I mean, that's just my experience, but, it's a metric for sure on how much we need housing in Denver.
Right.
Yeah. Everywhere.
Okay. From Axios, I don't know how you say it. AXIOS. Why U.S. home buyers are giving up.
Don't give up. That's what I wanted to shout at people. Just buy what you can afford.
Exactly.
Don't stretch yourself too much, but buy something.
Or like you said earlier, Nathan, like rent out a room, do something. Like you got to give up something to get something else a lot of times. So.
Yep. Just get started.
Yeah.
Yeah. It said 21% of Americans consider it a good time to buy. Only 21, which is a big drop from previous years. I don't know what it was before, but
But that's how this all works, right? It's like the Circle K effect. Like somebody goes in the line at Circle K, then everybody's going in the line. So now a lot of people think it's a bad time to buy, so everybody's
it's a good time.
But that's why these markets swing so much, because everybody at the same time has the same idea. And you should, what does Warren Buffett say when people are, what's that quote?
Fearful. If they're fearful.
Be greedy when people are fearful. Be fearful when people are greedy.
Exactly.
Yeah. And this is the time to go after it, in my opinion. So, because you can always buy and then you can refinance it later. Most likely.
Maybe.
Right? I mean,
That's no guarantee.
Yeah.
And don't tell buyers that, like make them think, oh, I can do that, because it may go up.
They all think the same thing.
If it goes up, then they're really glad that they bought. I mean, like who is looking at their house that they bought in 2021 with a 2.5 interest rate on it being like, man, I wish I hadn't bought.
Yeah,
seriously. Or 10 years ago, who's thinking, 20 years ago, wish I wouldn't have bought. It's all just a timing thing. And
I say this a lot, like real estate is not day trading stocks. So why are you trying to use a day trading metric on buying real estate? It just doesn't make any sense.
Yeah.
Like if you're trying to fix and flip a house, sure, maybe pay attention to what the market's doing. But if you're buying for long-term holding, it's an irrelevant question.
Yeah.
Yeah. I bought my house. I sold it in 2019, but I bought it in 2006 with the plan of taking some equity and blah, blah, blah. Well, I had no equity when 2008 hit. Like the market dropped. But I was able to keep it until 2019. Value went up. My mortgage never went up. All the stuff we've talked about. So as long as you can keep it and afford it now, go for it. Get in now. What was that?
How much did you buy that house for in 2006?
180.
How much did you sell it for in 2019?
380.
Yeah, exactly. And then you went through like the worst period of time where everybody.
I'll correct you even further. I bet you didn't pay cash for it. So the question really is, how much did you buy that house for?
Oh, yeah. Yeah. How much was your down payment? Good call. Yeah.
I don't remember. I wasn't
10%?
even
5%?
No, I'm sure it was 3.5 or 5. Yeah.
Yeah. So like 10 grand.
To make 200 grand, so.
Yeah. 2,000 ROI.
And plus you need a place to live anyway. So you're paying down your principal.
Yeah.
So
it was amazing. Yeah. All right. Well, hey, let's jump to our extra fun news item from payments.com. Doomsday ready. Costco aims to be the go-to retailer for preppers. So they've got some emergency preparedness food buckets with a 25 year. Yeah. And I saw also Home Depot and REI are doing the same thing.
Really?
Yeah. And it also said,
is this are we getting to our next Y2K? You guys remember that whole thing?
Oh yeah.
Is this what's happening? Everybody's predicting that, we're going to need food buckets.
Yeah.
It's funny because like how people in the Great Depression, they saved everything, right? And they lived super frugally, even if they had money. The COVID babies and the COVID era people are going to be that same way. Like, I saw the grocery store empty out. I saw the streets shut down for a month. Like, we need to be as prepared as possible. Guess what? I'm one of those too. I saw it happen.
Yeah, I figure, like in the movies when like the zombie apocalypse hits and everything, and you're like, yeah, I would be one of those survivors. I'm just gonna admit, I'm probably like the first one dead. I'm like the comedian relief who just like his head blows up in like the first 8 seconds of the film, and then like that's done. So you guys can have my real estate goes to my nonprofit, so you guys don't get it, but that's probably what's gonna happen to me. So yeah,
that's awesome.
Here it is.
Yeah.
I have barely any fridge in my food ever. So, and half the time my gas tank is mostly empty. So, and I don't even own a gun. So we're dead. I full on. We're done for. It's over. Life was good.
Well, are you handy with your outdoorsy, right? And you're handy, like you can fix stuff and whatnot?
Yeah. I can fish.
Come out to Arizona
all day,
I'll give you a gun and food and shelter. So.
Yeah. When COVID hit, I had put my stuff in storage, and it's like, holy smokes. And I read there's a really cool book called Emergency, by Neil Strauss. I highly recommend reading it. It's a fascinating book. He went on this like multiple year journey. He was a writer. I won't get into it. Look it up, but really cool book. But it kind of made me aware of how fast stuff can go sideways in a major way. You know, when the power goes out or whatever. So when COVID hit, I was like, this could go real south real quick. And so I went to my storage unit and got my guns out. I'm like, I'd rather have them than not. Like, who knows what's going to happen, you know? And I filled up some water jugs and stuff too. So,
that's awesome.
Wow. Well, guys, this was awesome. So we got through the news portion of the show. I'd like to thank our sponsors, United States Real Estate Investor Advertising and Universe Media Publishing. Thanks to you guys, James Michener, Nathan Caldwell. Thanks for sharing your feedback, your knowledge, and spending time. Why don't you guys let people know how they can connect with you if you want? Start with James and then Nathan.
Instagram is good. James R. Michener on Instagram, or Facebook, just James Michener is really good as well. Feel free to ask any questions. I love talking about real estate. It's like my ultimate favorite thing to do, which Nathan, me and you should connect too. That'd be cool.
Yeah, for sure.
For sure. Yeah, and stay on after we stop recording, guys.
Yeah.
Nathan, go ahead.
Yeah. AskNateAboutRealEstate.com. That's my website. Also, if you type that in, it's a hashtag on Instagram, so you can find me that way. My Instagram handle is Nathaniel D. Caldwell. And it's spelled weird. So Ask Nate About Real Estate's the easiest way to find me. Ask Nate About Real Estate. Yep.
Cool. Fantastic. All right. Thanks, guys. Again, I'm your host, James Brown, and I show people how to make safe, secure returns through our pre-vetted passive investments. If you're interested, join our private investor club so you can get those alerts for anything we come up with, because we can't advertise those to the public. So go to legacywealthcollective.com. Also, thanks to our producer, Antonio Hallman with United States Real Estate Investor. Follow and subscribe to This Month in Real Estate Investing on YouTube at youtube.com/@UnitedStatesREI, or your favorite podcast app where all the audio goes to those. If you run across any interesting news, events, or good guest suggestions, feel free to share. Just email Antonio at UnitedStatesRealEstate.com. And remember, when one door closes, another door opens to financial freedom.
Yeah.
Thanks, guys.
Thank you.